Hi everyone, Lee Lowell here, smartoptionseller.com. It is Sunday, April 5th, 2020. Just checking in with everyone, making sure everyone is healthy and staying safe in this new normal. Let's all try to get through this as best we can. Let's try to defeat this thing as fast as possible so we can all get back to our normal lives. I just wanted to create another video here, kind of like a weekly thing now. I want to show everyone what's going on in the market. And people have asked me over the last week or so, can we start buying options now? Is it time to buy call options? And what I want to say is right now is probably not the best time to buy any option, calls or puts, only because the option implied volatility is so high right now. It's still very high, not as high as it was a week or two ago, but still very high. When volatility is high, it makes the option prices more expensive than they were prior. So buying options you want to do when volatility is a lot lower, but that occurs when things are very stable and there's not a lot of action going on. So why would it be bad to buy options when they're expensive? Well, because it would take the underlying stock to move that much further in your favor in order for those options to pay off, because you're paying more for those options right now when volatility is high. Well, how can you tell when volatility is high, and how can you tell that options are more expensive? Well, I'll show you that right now. But let's just take a quick look at what's happening in the overall market. SPY is the exchange traded fund of the S&P 500, acts like a stock. It's just a general barometer of how the overall market is doing. In the last video that I made last week, I brought up these charts of the overall market. Of course, we can see the huge down move. We had the nice jump back up. And in that last video, I said we were bumping up against this blue line, which is the 20-day moving average. I said we'd probably have a little bit of a pullback from there, which is what we had last week. The market came off a little bit, not too much, which is a good thing. Keeping an eye on the coronavirus, obviously. And the hope is that the market does not drop all the way back down to the lows, although that is still a possibility. I think at that point we could have a pretty decent buying opportunity. Keep an eye on that. So let's go out and figure out why volatility has such a huge impact on option prices and why it's not the greatest time to buy options right now. Let's take a look at the VIX, the VIX. I may have showed this chart before. The VIX is basically, it's called a few things. Number one, it's called a fear gauge. Number two, it's the chart of the implied volatilities of the S&P 500 options. Now, obviously, this is a chart, a daily chart of the VIX. And as you can see, for a long period of time, it was at a very low level. And once the market drops, the VIX spikes. The VIX moves inversely to the direction of the general market. So when the market drops, the VIX spikes. When the market goes up nice and slow, the volatility is very low. There's not a lot of action. There's not a lot of erraticness in the market. But when the market drops and we have these huge moves up and down, the VIX goes up. And this basically lets you know that there's a lot of fear out there. People are panicking. They're selling. And that'll push the VIX way up high like this. If we go back to the monthly chart of the VIX, we see we get these spikes. This was the financial meltdown in 2008, 2009. And then every once in a while, we have these big spikes that only last, a couple days at most. Here we are right now with the pandemic. Volatility spiked again, starting to come down, which is something that we want to see. When volatility comes down, that means people are feeling a little bit more okay with things. Still fear in the market, but not as much fear. So the volatility spikes don't last very long. And so when volatility comes down, that what happens is the market starts to form a base. There's not as much fear anymore. So let's hope we stay in that traction. So when volatility goes up, it has a direct effect on option prices, which bumps up the option prices. And like I said, as an option buyer, it's not the best time to buy options when they're really expensive. So let's take a look at an option volatility chart for specific stocks and an option calculator so we can see the difference in option prices when volatility is high and when it's lower. Now, This page right here is from iVolatility.com. iVolatility.com is a great website to look at volatility information. What you see here in front of you, this is a volatility chart of Walmart. This is not a stock chart of Walmart. This is a volatility chart. It shows you how erratic the stock of Walmart has been moving, and it's also a chart that shows you what the option traders believe Walmart stock will move, how it will move in the future going forward. So you have two lines on this chart. You got the blue line, which represents the actual volatility of the stock itself. It's a 30-day look back period. So it takes the closing prices of Walmart stock and averages them over 30 days, and it'll show you how erratic the actual stock movement was. Obviously, over the last 30 days, the stock movement of Walmart itself has been very erratic, so it's moved from its normal range of maybe 15% all the way up to 70% just this week. This green line is the option implied volatility, and that is the collective guess of options traders of how erratic they think Walmart stock will be moving forward, and then it gets reflected in the options prices. So it moved up with the Walmart stock itself, and now we have a little divergence. The option implied volatility is moving down, while the stock volatility is actually moved up. So we've got a little divergence here. And so we'll see which one wins out. I have to believe things are going to calm down, and the blue line will come down and start to match up with the green line. So how does this help us? Well, if we want to price out Walmart options, we have to take volatility into account. So we can also use iVolatility in there. We can also use iVolatility for their option calculators, which you see right here in front of you. So let's take a look at Walmart and see how the volatility is affecting the option prices. What this does is defaults to the prices as of Friday. Walmart closed at 119.48. And let's just price out some at-the-money options, the 119 strike right here. And we'll move out. Let's go out to June. Switch that. And it defaults the option volatility in here based on what Walmart's been doing. We hit calculate. So we see that the option prices for the calls and put, the calls roughly $8 a contract and the puts about $7 a contract for June. Now, if we move the volatility down to Walmart's usual range of about 15%, type that in, we hit calculate, and we see the call and put options basically been slashed more than half. The call's around $364 a contract, and the put is worth about $280 something a contract. Much different than what it was currently defaulted at. If we can put it back, I think it was about 35%. Yeah. So look how much difference the option volatility changes the price of Walmart options. So this is a reason why, as an option buyer, it's a very dicey right now to buy options because they cost so much more. That means Walmart stock is just going to have to move that much more in your favor in order for these options to pay off. Put option, call option, doesn't matter. They both are affected by option implied volatility. So that's why people ask me, can we buy options now? Well, that's up to you, but it's better to wait for things to calm down a little bit and option volatility to come down as well, because then you won't be paying so much for the options. So that's it in a nutshell. I hope this has helped you a little bit. Let's go back to the chart here. Let's hope that we see a little uptick in market movement this week. Like to get this market moving back up. If it keeps continue moving down, I have to believe, this is a low. I hope we don't go past it, but if we do come back down here, I could see this as being a really great opportunity, and at that point, we may be looking to step into some trades. So if you need some more information, go back to the blog, read some of the past articles, and for those of you who are looking for some more information on one-on-one coaching, we've gotten a lot of requests for help from people. We just started our coaching sessions. And you can go to the website, smartoptionseller.com. On our homepage, If you click under services here, hover your mouse over services, one-on-one coaching, you can get a little bit more information about what we do, what we charge, what we can talk about. And also, if you hover your mouse over services, you can get some information about our newsletters as well. So that's it from my end. I hope everyone has a great week. Stay safe, stay healthy. This is Lee Lowell signing off.